Hey everybody, welcome back to the Chapple Show, and today we're going to be talking about the recession, and more specifically a question I got on Twitter, which was it was from Nils Thornley, and it said, about the predicted recession, what are the areas of the market that are typically more or less heavily affected during the recession? So we're going to talk about this historically, and wow, there's kind of a two-part answer here. So the one of which is very simple, and everything's affected in some way. Everything goes to the shitter. That's just what happens. But some areas are more affected than others. So anyways, we'll get into this here. So we're going to start off with a few of the recessions that everyone knows about. So sorry, I have my notes here. We're going to go to the big one called the Great Depression. So what happened in the Great Depression? So that is in 1929. What areas got hit the hardest? So most of you may know that in 1929 it was a big stock one, right? So valuations of companies fell 50%, right, in a very short period of time, and those companies started laying off workers to try and keep profits at a decent profits. Try to at least control their losses, I should say, not make profits. But yeah, so stocks went in the shit. All company, like, people weren't investing anymore. People were pulling out their money from companies, and so that kind of hit everything. Now, what people don't really remember or look into is that probably wasn't the worst thing that happened during that time. What the stock market was, that's just what happens. As we all know, it's all cyclical, right? People overborrow. There was a lot of inequality in 1929 as well. There was lots of things that led to that. But one of the things that people don't think about during the Great Depression was this. And I'll give you a hint here. There was something else going on from 1929 to 1935 which devastated everyone's lives, and a lot of people died. Agriculture. From 1929 to about 1935, there was something called the Dust Bowl, which a lot of you youngsters may not know about. So the Dust Bowl, what that was it was a severe drought like we've never really seen before in Canada and the United States. So just as an example here, around the time of the stock market crash, it happened to Canada. I'm not sure what the United States, what the level here was, but food production and agriculture production fell 58%. 58%. Now, that was the area that got hit the hardest during that recession. And it was kind of not a cause, but it was like something that happened, which definitely contributed to the recession. All the farmers, all those average middle-class farmers, all of a sudden, they couldn't produce food for themselves and couldn't produce an income. People don't really think about that. That happened at the same time as the stock market crash in 1929. So out of all the areas that got hit the hardest, agriculture in 1929, for at least North America, that was the worst. And guess what? North America got hit the hardest during the Great Depression. There was some stat I was looking up here. Unemployment, the growth of unemployment was 4 to 5 times higher in the United States and Canada. So put this in perspective here. Unemployment increased by 600% in the United States and Canada in 1929. And in Great Britain, it went up 129%. That's some perspective. And in my mind, yeah, sure, a lot of it was probably from inequality and all that stuff, but we experienced a drought here, a decimation of all the crops in 1929, and yet people don't think about that during the Great Depression from 1929 to 1936. So that's something to think about. But in general, stocks, I know it's kind of that's general because that stocks are just like, that's all the companies, right? But in 1929, everything got hit. But agriculture got hit the worst, all right? So, and definitely contributed to the Great Depression. So, we're going to use another example here. We're going to go to a small recession, small one, that happened in 2001. And this, most of you may know as the dot-com bubble. So some perspective for you here was Bill Gates currently has an $83 billion net worth right now. He also had about an $80 billion net worth in 2001. And that net worth almost got cut in half within a year's span. Because what happened was, it was the internet, all these internet IPOs were happening, and everyone was investing in them, and PE ratios were through the roof, similar to how they are now. And what happened was all the tech stocks got overinflated, and then just they crashed, because that's just what happens due to a bunch of factors from overinflation of prices. So, but when you look at it on a grand scale of the 2001 recession, it was caused by really two things. It was the dot-com bubble and 9/11 for the American stock market. Now, no really other areas apart from tech really got hit. I mean, statistically speaking, the recession had a negative 1% decrease in GDP, right? It was 1% decrease or something like that. And put that in perspective, in the Great Depression, it was a 30 to 40% decrease in GDP, and in the 2008 recession, which we're going to get to, it was like negative 12% or 7%, or it was something like that. So, anyways, in 2001, it was tech, and statistically speaking, too, tech seems to be one of those bubble things that always crashes to some extent during every cyclical recession period. And I explained that a recession happens every 4 to 10 years. Tech always seems to take a hit for some reason. It's just something that I've looked at. And tech always gets hit in some sort of way. Now, something else we're going to talk about here is the 2008 recession. And we all really know what happened there because I've explained that so many times. But just to summarize here, there was 4 key factors, but the main one was real estate and stupid people. The main one was real estate in 2008. Real estate is one of those weird things where it's cyclical, and I guess it kind of gets hit during every recession, but sometimes it doesn't. Sometimes it doesn't get hit too bad. So I know that this video is about what gets hit the hardest during a recession, and I would say, generally just speaking, everything gets hit a little bit, but I've just noticed that tech specifically seems to be one that gets hit a little harder. But saying that, here's the thing, is that tech after the recession also has the greatest increase after a recession, usually, right? So in terms of appreciation of the value of the company, unless it's like a BlackBerry and it just goes into the shitter, right? So yeah, I would say what gets hit the hardest is tech companies specifically, but some of them still do pretty well. I mean, Facebook did pretty well after 2008, right? I mean, the value of the company still, I don't know, but it's just, there's so many factors. But what I will say is that tech companies as a whole, I'm not specifically talking about internet companies or whatever. It could be some manufacturing that's different. Manufacturing is different than tech. But just what I've seen is the tech sector seems to always get hit, but always seems to have the most growth after the recession. So it all kind of cancels out here. Now, during each recession, there's always one thing that gets hit the hardest. And I think an important question is, what will it be during the next recession? So in Canada, I do think that Canada is going to see some sort of real estate recession. I don't know how bad it's going to be, but specifically in Toronto and Vancouver, I mean, it's so unsustainable. There's people making 50 to 100 grand a year and now it's slowed down a little bit, but that, they were able to get, $750,000 to $1 million houses. This was a couple of years ago. They changed it, but they changed the mortgage lending to hopefully not have a recession. But I don't even really know what it's going to be. I think that we're going to see a retail market get hit here. So here, let me talk about this for a second. What do I think is going to get hit hardest in the next recession? Now, I don't know. This is pure speculation, but here's what I've seen. So I work in real estate, right? I talk to real estate people all the time. And what we've seen strangely in the past 6 months was commercial real estate investments specifically. That's what, so I'm going to put this in perspective here. Okay. So commercial real estate investments. So retail specifically. So this is very, very specific here, but it's something where there's a lot of employment and all. Let me just get to this here. So a commercial real estate investment. So you go, let's just say you're a young person that still goes out to go shopping apart from things that aren't grocery. Let's just say you go to a shoe store, okay? You go to a shoe store. So you're going to, I don't know, a place downtown Toronto, okay? So the price per square foot for the person renting out the property to sell shoes was $60 per square foot in this area, okay, in Toronto. This is an example that I saw. So this was in 2015 that happened. $60 per square foot, and it was around $50 to $60 per square foot to lease out this place for, I don't know, the last 4 years or so. Now, because of stuff like Amazon, like eBay, that are just kind of, that took over the market, and online shopping in general, all of a sudden, all these retail stores, they aren't making as much money, so a lot of them are actually going out of business. That's what's happening. And so what's been happening too is because the landlords are trying to get someone to just like fill the lease and to try and make some money, they're willing to decrease their lease price. And here's, I shit you not, this is what happened. This same place, now we've seen this in a bunch of different places, but this same place specifically, that was $60 per square foot consistently for 5 years after the recession, 5 to 7 years after the recession, that same place went for $25 a square foot. And it was great spot, great location, great building. There was nothing wrong with it, but it was built for a retail store, and there's no retailers anymore. There's no one that wants to open up a mom and pop shoe store because they can't make any money. They can't open a mom and pop electronics store because they just order stuff online. I mean, I ordered stuff online recently. I ordered a camera online. I didn't go to the store. It was $150 cheaper to buy it on Amazon because, places like Best Buy, they have to mark it up $150 to keep the lights on and pay the lease and pay the employees. So in my mind, I do think that specifically the retail sector is getting hit right now. But saying that there's a sector of the commercial area that's doing better, which is like food service. I mean, food service is doing pretty well. People don't really want to cook as much right now anymore. People would rather go out and just buy a $5 sub or something like that. And so I think that those food service places are starting to replace the retail locations. I know that this went on a whole different tangent, but I do think that commercial retail it's a problem right now. And we're starting to see a lot of those companies that didn't know what they were doing, they're starting to go out of business. Like we're seeing like Target. What happened to them, right? They got kicked out of Canada recently, right? So, but saying that, there are a lot of retailers that were smart. I mean, the Hudson Bay Company, I know they had a similar business strategy to McDonald's where they most of their money did not come from selling you shoes or high-end clothing. Most of their money came from buying the land that their stores were on. And they actually just recently I think that they bought out Macy's. Did they? I think that they bought out Macy's recently, or Sears or something like that. And because obviously Macy's or Sears didn't do it right. And the Bay did. The Bay knew that the money's in real estate. The money's not in retail. Retail's a dying field. Now, I don't know if that's going to be the cause of the recession, but I think that's going to get hit pretty hard, all those retail stores. So, I'm just going to do a quick look up here and just see what happened to, what's a retailer? I'm trying to think of one. Let's see what happened. Maybe we'll do Nike. What happened to Nike during the recession, right? It's not a retailer, but the Nike is a product, makes products which are sold on shelves usually, right? So what happened to them in 2008? Oh, actually, no, they did pretty well in 2008. I shouldn't say that. Oh, no, no, their company decreased in value by 50%. Okay. So, yeah, I guess retailers do get hit pretty hard during the recession. So, anything high end usually gets hit pretty hard too, but not too high end. I mean, the billionaires still do well during a recession. It's the people in the, $100,000 range, $50,000 to $100,000 range, whatever they spend their money on, that usually gets hit pretty hard because they are still doing fine. They'll just pull their money back from those high-end products that they're used to buying. So that's my opinion. I know that I've heard some other things too. Like I've heard that there's a car loan problem that's going on right now. Like car loans are pretty much being as regulated as they were, as the housing market was in 2006, 2007, which is kind of scary. But saying that, not everyone has a car, right? I know a lot of people in the city. Here's why I don't think it's a problem. Most people in the city don't have a car and they just walk to work or bike to work or take an Uber, right? They don't need to own a car, right? So I think that the major cities would be fine with that one. But I've heard that car loans are bad. I've heard that payday things are so unregulated. Payday loans are so unregulated. Pretty much look at areas that aren't regulated too right now in the financial district. So even I think that financial institutions could get hit pretty hard too right now. I mean, interest rates are so low. Maybe banks will get hit hard again. They could. So I don't know. There's a lot of areas that could get hit pretty hard. I don't think real estate will get hit as hard as it did in 2008. In fact, because I think that regulations got tightened a lot there. Yeah, but I think that the next one's going to be commercial retail. It's going to be stuff like loans and some financial institutions. That's just my opinion. What do you guys think is going to happen if the next recession hits soon? Where do you think it's going to happen? That's just my opinion. So anyways, that's going to wrap it up. I'd like to thank you very much for watching. You're all very beautiful people. I'll see you in the next video.